Bismillahirrahmanirrahim. Let us discuss, that is our lecture number 4, P6 ATX. In the last class, we have discussed what is adjusted net income. The concept was in the last class we did discuss what is ANI. If your ANI is more than 1 lakh, then your personal allowance starts reducing. Okay. How do we get, and what is the objective of having this concept of adjusted net income is, actually those people, they are very rich in UK, actually they should not get the benefit from personal allowance. So in order to just stop those people, they are really wealthy people, they should not get benefit from the personal allowance. What HMRC has done, they have introduced the concept of adjusted net income. And whoever is having adjusted net income more than 1 lakh, personal allowance starts reducing for them, and anyone is having income, adjusted net income 1,25,000 or even more than that, then personal allowance becomes 0. The format of adjusted net income is very simple. All you need is take net income less gross gift aid donation, which is not examinable in P6, less gross PPC, which is examinable in P6, adjusted net income. You will get adjusted net income. If adjusted net income exceeds 1 lakh, then personal allowance starts reducing. The formula is 50% into ANI minus 1 lakh. Okay. Let us discuss question number 4. Let us see the application of question number 4. Let me take out my book. Okay. Lorna has an annual salary 1,30,000 and made a gross personal pension contribution in 2021 is 19,000. Calculate Lorna's taxable income for the tax year 2021. All we need is just calculate taxable income for Lorna. Okay. Examiner is not asking us to calculate tax payable. Let us also put another requirement. Calculate income tax payable as well. Okay, one more thing. Whenever you have been given personal pension contribution and nothing is mentioned, we will always assume that amount is net amount. That amount is 80%. You have to gross it up. So let me repeat. Whenever question just says personal pension contribution and nothing is mentioned that either it is net or gross, then we will always treat given PPC is net. We have to gross it up. How do we gross? All you need is multiply with 100 and divide it by 180. This is how we gross up the PPC. But in this question number 4, question itself says gross PPC. So no need to gross up. Another thing, contributing in gross PPC, contributing in PPC is not your expense. Contributing in PPC, contribution in personal pension scheme is not the expense of individual. So, contribution in PPC will not reduce your taxable income. Gross PPC does reduce your adjusted net income, but it cannot reduce your taxable income. So, let us solve question number 4. We have to go over here. Question number 4. So we have salary, which is non-saving income. Salary is 1,30,000. We need to check how much personal allowance is available. Working one. Normally the limit of personal allowance is 12,500. But this 12,500 starts reducing when your adjusted net income is more than 1 lakh. In this question, we have net income 1,30,000 less gross PPC, which is 19,000. So your adjusted net income is 1,11,000, which is more than 1 lakh. So definitely your personal allowance will reduce. Either you take 1/2 of this bracket or 50% of this bracket, it is the same thing. So we'll reduce 5,500. So you will get personal allowance of 7,000. Lorna is going to get personal allowance of 7,000 instead of 12,500 because her adjusted net income is more than 1 lakh. She is having adjusted net income of 1,11,000. So she is entitled to get personal allowance of 7,000. Her taxable income is 1,23,000. Okay. Now we need to calculate tax as well. Since she has contributed in gross PPC, so her basic rate band limit will not be 37,500. Now her basic band limit will increase with the gross PPC amount. So normally the basic rate band limit is 37,500, but for Lorna it is not 37,500. We need to add 19,000 into this, which is gross PPC. It means she is having a basic rate band limit of 37,500 plus 19,000. So her basic rate band limit is 56,500 into 20%. That gives us tax of 11,300. Higher rate band. If I deduct 56,500 from 1,23,000, so what is the answer? Let us deduct 56,500 from 1,23,000. So I'll get 66,500. Entire 66,500 falls in higher rate band, and 40% of this amount is 26,600. So income tax payable for Lorna is income tax payable. So income tax payable is 37,900. So Lorna is having income tax payable of 37,900. Now let's see question number 5. Calculate income tax payable for tax year 2021. Tristan earned employment income 1,37,500 and received bank interest of 22,500 and dividend 17,000 in the tax year 2021. To be very honest, my advice here is you people should stop the video over here and try to attempt question number 5 by yourself. Then obviously you can look at the video. So I would strongly advise that everyone should stop the video over here and should try question number 5 by themselves. Let us deal with question number 5. I strongly believe that you have tried question number 5. We have non-saving income, we have saving income, we have dividend income, and obviously another column is of total. Employment income is a non-saving income. Any income which is not saving income, which is not dividend income, that is your non-saving income. 1,37,500, and saving income is very simple. Interest income is saving income. Dividend income is 17,000. Let us add all of them. 1,37,500 plus 22,500 plus 17,000 gives us 1,77,000. Obviously, personal allowance is 0 because adjusted net income is more than 125, so personal allowance is 0. This individual is not getting any personal allowance because adjusted net income is far more than 1,25,000. So here comes the taxable income. This individual has not contributed anything into PPC. So let's calculate income tax. Basic rate band, non-saving, 37,500 into 20% gives us 7,500. Higher rate band, non-saving. If we deduct 37,500 from this 1,37,500, we get 1 lakh. 40% of this is 40,000. Okay. So we have tax non-saving income. Now obviously we have to move to saving income. Before applying any tax rate on saving income, you need to decide that individual is a basic rate taxpayer or a higher rate taxpayer or an additional rate taxpayer, because whoever is a basic rate taxpayer needs to have will get nil rate band for saving income for 1,000. If someone is a higher rate taxpayer, that person is entitled to get nil rate band of 500 for saving income, and someone is an additional rate taxpayer will not get any nil rate band for saving income. Look at this, 1,77,000, which is far more than 1,50,000, because higher rate band ends at 150. This individual is an additional rate taxpayer, and whoever is an additional rate taxpayer, that individual does not get nil rate band in saving income. Okay, now we need to tax 22,500, and since this individual is an additional rate taxpayer, so this individual is not getting any nil rate band for saving income. Let's see how much space is left in higher rate band. Actually, your higher rate band limit is 1,50,000. Out of 1,50,000, we have utilized 1,37,500, which means that still we have the limit of 12,500. The relevant tax rate is 40%. 12,500 40% gives us 5,000. Now we move to additional rate. First, saving income. So we have total amount of saving income is 22,500, and out of 22,500, 12,500 actually falls in higher rate band. So now higher rate band limit is fully utilized. So if we deduct 12,500 from 22,500, the answer is 10,000, and that 10,000 of saving income falls in additional rate band, and tax rate is 45%, which gives us 4,500. Okay. Now let us move on dividend income. In case of dividend income, it does not matter that individual is a basic rate taxpayer or higher rate taxpayer or an additional rate taxpayer. Let me repeat. In case of an individual, it does not matter when it comes to dividend income that individual is a basic or higher or an additional rate taxpayer. Every individual in UK, irrespective of the tax paying status, every individual in UK gets nil rate band of 2,000 for its dividend income, irrespective of tax paying status. So we have dividend income of 17,000, but first 2,000 falls in nil rate band, so percentage is 0, gives us 0. Now additional rate. For dividend income, additional rate limit is 38.1%. 15,000 into 38.1 gives us 5,715. Let us add all of them. 7,500 plus 40,000 plus 5,000 plus 4,500 plus 5,715. That gives us 62,715 income tax payable. That is income tax payable. Okay. Now let us discuss one or two more concepts, then we'll move to another question, inshallah. Let me have a little bit of water. Okay. So Ramzan is over, alhamdulillah, so I can drink water now. No issue at all. Okay, There's one more concept. The concept is income of minor child. Income of minor child. If a minor means the age is less than, of course, I would say, who is not having a legal age of 18 years. Someone is having age of less than 18 years should be considered as a minor child. Okay, income of minor child. If the amount of the income is less than or equal to 100 gross, if the amount of minor child income is less than or equal to 100, then this income belongs to this minor child. If minor is having income of 100 or less than 100, that's a gross income, then this income belongs to that particular minor. But in case of, if gross income is less than or equal to 100, then this income belongs to a minor child. If gross income is more than 100, then income belongs to a parent who has given this income to the minor child. Repeat. If a minor is having income more than 100, then that income will belong to a parent who has actually given this income to the minor child. So you have to look at the question carefully. If the amount of the income is less than or equal to 100, then leave it, because that entire income belongs to a minor child. But if minor is getting the income of more than 100, then actually this income will be treated as income of a parent who has given this income to minor child. Let me discuss another concept. The name of another concept is income on jointly held property. Income on jointly held property. Okay. In case of husband and obviously wife, in case of husband and wife, in case of couple, if they have jointly owned property, if couple is having jointly owned property and let's say they have given that property on rent, then whatever rent income comes, it will be split equally between husband and wife, that is 50-50%. Repeat. In case of couple having a jointly owned property, and let's say they have given that property on rent, whatever rent income comes from that property, that rent income will be split 50% between husband and wife, irrespective of actual proportion of ownership. It is very much possible that actually that property might 75% belong to husband and 25% to wife. But what is the income tax treatment? Whatever the property income comes, it will be split between husband and wife 50-50%, until unless actual ownership have been declared. to the HMRC. Until unless couple is not going to HMRC, they're not disclosing the actual proportion of the ownership, whatever the income comes from the property, we will split that income into husband and wife 50-50%. Okay. In order to not to split the income 50-50%, then husband and wife, they both have to pay visit to HMRC and they have to jointly declare to HMRC what is the actual proportion of the ownership. Whenever nothing is mentioned in the question, and we will always give 50-50% to husband and wife if they both own the property jointly. Okay, let's see a question. There's one question, the name of the question is Kate. Question 9. Actually, question 8 we have done. Kevin and Jody we have done in the previous class. Question 9. It says calculate income tax payable by Kate for the tax year 2021. Kate has the following income, outgoings and allowances for the tax year ended 5th April 2021. She is married to Norman. Salary 37,200. Benefit assessable as employment income 1,875. Allowable expense for employment is 95. Bank interest received is 650. Building society interest received is 2115. Interest from individual saving account is 500. You need to remember that interest from ISA, individual saving account, is exempt. Repeat. Interest from individual saving account is exempt. One more thing, let me discuss a little bit more on to this ISA. In Finance Act 2020, individual saving account limit is £20,000 per tax year. Repeat. In UK, in Finance Act 2020, individual saving account limit is £20,000 per tax year, which means that whoever is holding individual saving account, then if you deposit amount up to £20,000, then whatever the income comes from ISA, that interest income is exempt. One more thing, it is not necessary that you have to keep entire 20,000 in ISA in the form of cash. You can split this amount into cash as well as shares. It's up to you. Just for example, in ISA you have kept cash 12,000 and for 8,000 you have bought shares. The limit of ISA is 20,000. Either you keep that 20,000 in the form of cash or shares. For example, the 12,000 are in the form of cash and 8,000 they are in the form of shares. Then those shares, they are in ISA. The dividend income from these shares is exempt. Repeat. If your examiner says that Mr. XYZ has received a dividend income and dividend income has come from shares which are in ISA account, individual saving account, then that dividend income will be exempt. If someone sells those shares, they are in ISA, then whatever the capital gain comes, that will also be an exempt gain. Repeat. Simply you need to remember three things. Interest from ISA is exempt, dividend from ISA is exempt, capital gain from ISA is exempt. So individual saving account limit is £20,000 per tax year. Either you keep amount in ISA in the form of cash or shares. Whatever you get from ISA, either interest income, dividend income or capital gain, all are exempt. Okay? So this 500 is exempt. Norman and Kate have a daughter, Ashley, age 10 years, obviously minor. Ashley was given a £5,000, 3.5% gold loan on 6th April 2020 as a birthday present by Kate. Wow. I would say Ashley is a lucky child. She gets a birthday gift of £5,000 from parent Kate. Interest is received gross. Now listen, if I take 3.5% of 5,000, it gives me the interest income of 175. Since Ashley is having gross income more than £100, so entire 175 belongs to Kate. This 175 does not belong to Ashley, because the rule says if a minor is having income of less than equal to £100, then it is fine, that income belongs to that particular minor. But in case of having income more than £100, then entire income belongs to a parent who has given this income to the minor child. So this 175 actually interest income belongs to Kate, because it is more than 100. On 15 November 2020, Norman and Kate jointly bought property that has been let out, unfurnished accommodation. Assessable property income for the tax year 2021 is 4,100. No declaration has been made in respect of this source of income. So this 4,100 has to be split. 50% belongs to actually Norman and 50% will be given to Kate. If I take 50% of 4,100, it is 2,050. So since they have not declared actual ownership, so this 4,100 will be split 50-50%. 50% belongs to Kate and 50% belongs to Norman. We need to calculate income tax payable by Kate. So let us deal question number 9. Again, I would request you should stop the video over here and try to do the question number 9 by yourself. Then obviously you can always refer to video. There is no issue at all. Actually, we have employment income and we have saving income. That's it. Non-saving income, saving income, and total. We do not have any dividend income. Okay. We have salary. We can do one more thing. Just a minute. Let me calculate employment income. The amount of the salary is 37,200. Benefits 1875. Allowable expenses 95. Let me use my calculator. Salary is 37,200. Assessable benefits are 1875 minus allowable expense 95. That gives me 38,980. Okay. Bank and trust. The amount of the bank interest is 650. We have interest from building society. Building society interest. ISA interest from ISA is exempt. You have to tell your examiner. Interest from ISA, that is exempt. Okay. 3.5% war loan. 3.5% war loan. 5,000, 3.5% gives us 175. Since this is more than 100, so entire amount actually belongs to Kate, not to minor. Property income 50% belongs to Kate. Property income is a non-saving income. If I take 50% of 4,100, that is 2,050. us add all of them. We'll get total income. Let us see what is the amount of total income. 38,980 plus 2050. That gives us 41,030. Let me check what is the total of interest income. 650 plus 2115 plus 175. It is 2940. Three eight nine eight zero 650 2115 179. Great. Personal loans, we need to deduct personal loans from non-saving income. We will have taxable income. $41,030 minus 12,500 gives us 28,530, 2940. It comes to 31,470. So let's calculate income tax. Basic rate band, non-saving. Entire non-saving amount falls in basic rate band to 20%. Before applying again any tax rate on saving income, we need to check that Kate is a basic rate or higher rate or an additional rate taxpayer. Look at this amount, 31,475. This 31,475 is even less than 37,500, which means that Kate is a basic rate taxpayer. Since Kate is a basic rate taxpayer, so Kate is entitled to get nil rate band of 1,000 for her saving income. Nil rate band saving income. 1,000 to 0% gives us 0. Basic rate band saving income. So out of 2940, 1,000 falls in nil rate band. So in basic rate band, actually it falls 1940. 20% of this. 1940 and 20%. 1940 and 20%. That is 388. So income tax payable. So income tax payable for Kate is 20. Income tax payable for Kate is 6094. Income tax payable for Kate is 6094. That's great. Let us see question number 10. For the tax year 2021, Peter has pension income is a non-saving income 8,000, saving income 4,500 and dividend income 9,000. Question number 10. Again, I would just suggest that you should stop the video over here and try to attempt the question number 10 by yourself, and then obviously you can take help from the question or from the video. Question number 10. Let's try now question number 10. I strongly believe that you have also tried this question. Non-saving, saving, and the final is dividend income. Total. Pension income is a non-saving income, which is 8,000. Amount of the saving income is 4,500 and the dividend income is 9,000. Let us add all of them. 8,000 plus 4,500 plus 9,000 gives us 21,500. Personal loan. We have personal allowance 12,500. Out of that 12,500, we have used only 8,000. So still we have 4,500. But remaining personal allowance we are not going to deduct from saving income, because look at the amount of saving income. This saving income 4,500 entire amount actually falls in a starting rate band. And we have a starting rate band because non-saving income after deducting personal allowance is 0, which means starting rate band is available for saving income. So entire 4,500 actually falls in a starting rate band. So there is no need to deduct remaining personal allowance from saving income. Now we will be supposed to deduct remaining personal allowance from dividend income, and we have discussed this concept earlier as well, that you can change the allocation of personal allowance provided that you should get benefit from that. So whenever you come across a question where your entire saving income falls in a starting rate band, then it is highly advisable that remaining personal allowance should be deducted from dividend income rather than saving income. So remaining personal allowance is 4,500. We will be deducting this from dividend income. Okay. So starting rate band 4,500 into 0% obviously gives us 0. Dividend income nil rate band. Dividend income is 2,000. 0% is 0. Basic rate band for dividend income. The amount of the dividend income is 4,500, and out of this 4,500, 2,000 falls in nil rate band. So remaining 2,500 comes in basic rate band, falls in basic rate band. And if I take 7.5% of 2,500, it gives me the result of 187.5, and you can take 188 as well. So income tax payable is 188. Your income tax payable is 188. That's great. Now we are going to start a proper topic. But before starting that, let me tell you something. Okay. Just a minute. Okay, there are few incomes which are exempt. You need to know what are those incomes. Let me just tell you. One is income from ISA is exempt. There are few exempt incomes, you need to remember them. Income from ISA is exempt. National Saving and Investment Certificate. National Saving and Investment, that is saving certificate. Saving certificate. Interest is exempt. If you are getting interest income from National Saving Certificate, it is exempt. Interest on overpaid tax. If an individual has paid more tax to HMRC, if individual has paid more tax to HMRC, then HMRC is really good in UK. Number one, they will refund overpaid tax to HMRC, and second, they will give interest to that individual as well. But that interest income is exempt, and the rate of the interest income is only 0.5%. And just to get 0.5% interest, I don't think so that individual they are going to pay more tax. But if someone has paid more tax than its actual liability, then HMRC is going to refund that tax, plus HMRC will provide interest income to that individual, and that interest income will be an exempt income. Okay. Another is gaming, lottery, and premium bond winnings. Premium bond, I think it should be prize bond winnings, not premium. It must be prize bond winnings. If someone is getting this prize bond winnings, then that is also exempt in UK. So these are the few exempt incomes which you should know. One more, let me write. Statutory redundancy payment. Statutory redundancy payment is also exempt. Statutory redundancy payment is also exempt. From the next class, inshallah, we will start a proper topic. The name of the proper topic is property income. Property income. So inshallah, in next class, we will start property income. And after property income, after completing the property income, which is not a big topic at all, we will start a very, very important topic. The name of the topic is employment income. And normally employment income comes in ATX. But first we will be studying inshallah property income, and after property income we will start employment income. So thank you very much for watching this video. Assalamu alaikum. And please, it is a humble request. Every one of you is supposed to make a proper register. You should note each and everything in the lecture. So in case of any queries, you can always ask question on WhatsApp. So once again, thank you very much for watching this video.